Good evening, everyone. This is going to be a little trade overview of Black Friday trading. So I got my target up there at 21,000, which is that white bar. You can see me get long just to start my initial position with the micro. I mean, I have room down around that fair value area, which is that dotted line in the middle of the screen. I'd like to add more if we get down there. I'm just watching to see what it reacts out of there. As you can see, I'm long from 20,970. So price coming up into that solid blue line right there. That's going to be the middle of that range from the high to its first swing low. And being that it's a Friday with an early close, I don't expect, very quick movement. So I'm willing to be a little patient on these trades to pan out. I expect a lot of back and forth around ranges like this, especially after a large move from the morning. So ideally, I want to see this make a higher high on this run right here. So we should hit that low where my entry is, shouldn't return there. And if it does, then we'll probably test lower, closer down to where it says OBMT. So, and this is just your typical kind of range trading. Not really looking for huge moves, just trying to get a grasp. So my profit fills into that new high right there. Now my target filled. So we'll give it some time before we get into another position. We'll start looking at sizing up. Up about $170 on the day so far. And coming up into this little gray box, I'm kind of figuring, does it want to rip into new highs above 21,024s? Or does it want to kind of start running against the longs from all morning? Because in the back of my head, I'm anticipating that anyone that's been long today is going to get hurt before the market closes. And since we have an early close today, I'm very cautious about holding my longs into higher highs on the day. I'd rather just keep buying low and selling into new highs as we keep getting pullbacks. So it's a nice clean off that OBMT right there. And that's from a few weeks ago, that level. So since there's such a strong reaction coming out of that, and we're closing below that, the gray box I have outlined, I'm expecting a move down to 20,000 around 979 if we can get it. But again, I'm not too impatient for anything to really happen. I expect a lot of back and forth because of the morning that we've had and the day of the week that it is, including that yesterday was a holiday. So cut that one at break even right there. I'm going to let this range kind of develop. I'm going to see if it wants to go right away or if maybe I should wait. All right. We're coming into the lowest place possible that I see this range kind of like, because basically it should stop at that OBMT area as long as we're not seeking sell side liquidity. Basically put, I don't believe that high we made is the high of the day. I think we're going to take that again. So as you can see, extremely nice reaction off the area that I had drawn. I got 2 contracts long right there. And now we got to remember that we're developing a little range right here, right? So we made a higher high, and now we're making a low. So the object, right, of trading is to buy low and sell high. So as these candles came down and hit my lower end of the range, all I'm looking to do is offload half this back at fair value. So I took one off right there because we're coming back to the middle of the range. Now, best case scenario, we'll expand the range and go higher, but I'm willing to be more than patient that it doesn't necessarily have to do it on this run right here. You know, it's got to give time for traders to kind of put liquidity above that old high and below that low we just made. So I can expect some back and forth right here. And I still have, you know, half my position on. So I probably took a few $100s of profit right there off that low and then moving my stop to break even. So no matter what, it's risk free. And that's kind of like the position I like to be in on days like this, where we're going to see a lot of back and forth, a lot of, you know, moves up, followed by an immediate move down, followed by another move up. This is not, you know, the best environment, in my opinion, to be holding, you know, one contract from your, you know, okay entry around that where price that's probably going to touch it multiple times. You know, there's going to be multiple visits to my entry. And so it's just to try to mitigate any drawdown that I might incur. I like to just cut the losers fast here and take profit when the market makes money available to me. So this is, you know, coming from a lot of experience of understanding how the market will move on certain days and at certain times. You know, this is much different than how I'm trading off the open or off any new big news impact time. I'm trading anticipating there not to be big moves right now. So I'm just marking everything up, reading price action, constantly analyzing what makes sense for a price to do, where my stop should go. If I was going to add, what's a good risk to reward area to add. So right there, we see it visit the low candle, turn around and immediately visit the high candle. So right now we're painting back and forth. And again, this is to be expected at this time of day. Friday during a lunch session on an early close. Not a lot of volume coming in here. And it's worth mentioning, if you can't tell, this is sped up pretty fast. So when you're actually in the trade in the real session, it moves much slower. So right there, I'm just wanting it to crack into new highs again. And I believe at this time, S&P and Dow Jones had already hit a new high. So, you know, I'm pretty confident that's why I'm not taking profit at the high of the range, because the other 2 indices had their highs taken. So this is kind of an expansion target now, where we expand a little higher to that 21,008 level. And I would anticipate once it gets up there, we should see it move right back into the range again. So I've got my stop right there. About $60 of profit. Pay for any like commissions and just make sure that my P&L curve is always going up on every trade I place. So a lot of back and forth right there. And And basically, if it's going to take the high, it should do it on this run right here. So since my risk is so small, I'm willing to buy another contract back on this retest right here. All right, candles are falling, so I went long, added to my position. My total risk was $100, and right there it jammed up that low. So now I'm expecting it to break that low. And this is kind of where experience comes in right here. You see how it's failing to take that low at OBMT? That's concerning to me. And then we're getting large candles moving out of that. So I immediately know if you're failing to take that low right there, we're likely going to take that high. And so this is where the odds start to get really good in my favor. And I want to see a fast move to the high right now. So there's fair value. So I'm going to look to add to my position if we get below fair value now. I'm looking at expansion targets right there. So I did take a small loss right there, but I was able to get re-enter. So we're approaching that previous high right there. And I want to see it grab new price. So there's your grab on new price. I exited my position. And we're up about 365 on the day now. So, and now since those lows are kind of so close to one another, I know that traders are going to be placing stops there. And the market's going to refer to those. However, how far this range could expand, I'm not 100% confident in, so that's why I'm not willing to hold long. And conversely, I'm not willing to get into a short either. I need more data to figure out basically what is more probable. Are we going to revisit 20,000 930s or are we going to visit 21,024s? And that's all I'm kind of weighing out right now. So there's our little range right there at the high. It took that low. It's coming back. Let's see if it wants to take out these highs up here. And I just throw a micro on. If we do want to expand out of this kind of range we've been building up since about 11:40 a.m., then we should see 21,025s. If it wants to keep all that price elevated. If it starts to fail up here, that's a very good sign that those equal lows that I have marked are going to be in play. Basically, it doesn't need a reason to return to this range unless we're taking out lows. So watch what it does when it gets around to fair value. So right here, this is discount. Very sluggish. And now I'm trying to wait till the 1250, which is an important time. So right now we're trading exactly in the middle of the range. There's not much to do. So as we start to get into a discount, right, we want to buy low. So I buy, I add to my micro position. Not too confident in highs now, but if for some reason, you know, we do end up higher, my risk rewards are very, very good. So I added a third micro right there. And so that's a failure right there. So that little jump up, right, and the failure for it to continue up to the high again tells me that our probability of trading lower is much better than our probability of getting into a higher high now. So now that I've kind of flipped my bias, I'm waiting for a short opportunity. So right there, we trade up into the highs. You know, you're not going to be a part of every single move, but that seems like a very overzealous move higher. And right there, that's an immediate turn to the range. So I went short off that move up, anticipating traders are going to chase that up. And now my target is those equal lows. So if you see how the market kind of moves, it's enticing people to make decisions. It's enticing people to chase it. So it move up really fast and now it's stalling. But people that are going to chase that are going to try to buy up here. And sometimes it works, but as you'll see, most of the time it does not. Most of the time, the market returns and hurts you. So now I have to just continually observe it and see what the best areas for me to get shorts in. So I have one short full size and one short micro. And then I'm going to try to get another short on here if it can give me a good pop. But again, on days like today, you're going to sit through a little drawdown. Your trades are not going to go exactly how you want them to. So we sold right there. So 0.2s, wherever that little blue line is. And now I want to see price carry into a new low right here. And this is how you navigate a choppy market. I got some orders down there ready to take profit around 81s. I took profit right there coming into the previous low. And now the rest of this is at risk-free. And see right here, it should be diving for those equal lows, right? Like the secret's out that we're going lower. So when it starts to have these little pump ups out of these low wicks, right, out of this little area right here, that little imbalance that I have marked, it's not conducive to quick moving markets. And this makes me think that we're going to end around fair value, which is, 20,992, it looks like. So on this one, if I see any price move lower, it's worth it to take profits and not hold out for the extra few points, because at the end of the day, all I need is the bulk of the move. And I've identified an inefficiency up there that we could trade to if this low fails to break through. So all I'm waiting for is a crack into a new low, and I want to see how far it'll carry through. It should be fast. If we get above fair value, I think that we're going to trade up to 21,004 before market close, which would put me in a negative position and not worth holding. Like ultimately, I'll be right that the equals lows will trade, but how much am I willing to risk to do it? You got to manage your position accordingly. So for me, I'd rather take a $155 profit and be wrong for this last 30 minutes of trading or whatever than risk it all. Either way, I'm still making more money with each trade. Sometimes it works out in my favor immediately. Sometimes it takes a little longer and I get stopped out around break even. Either way, my equity curve still grows. So we broke into a new low and I exited right there. I'll pull up my P&L on the screen so you guys can see. So 890 on the full size contracts with $42 a loss on the other ones. So not a bad day at all, especially for looking at price action. Super overlapping, super choppy, yet if you know what you're doing, you can navigate just about any market. And see how I ran close to those equal lows and is immediately returning. And then the market's going to come to a close in a minute. So I would say that was a success covering into that low, because I would have been taken out on this move back up right here. So that's all I got for you guys on a Black Friday. I missed the morning session because I slept in, but it is what it is. We still were able to, take out $800+ of the market. Relatively no drawdown. So take care.